Golden Goose Property versus insurance. Should you buy a property and rent it out to get passive income, or should you put more money into insurance? And I think this is a question a lot of people have. I prefer very safe investments, or I don't really know very much about investing, so I'd rather put my money in insurance and just let it grow over time. Or I prefer more stable assets. I'm not sure about other forms of investing. So today, we're going to tackle this question head on. Before that, my name is Daniel, and I create videos every week to help people grow passive income through property so that they can live their lives of passion when they gain more time freedom. So first of all, what is a Golden Goose Property? Those of you who've been following my channel would know, but for those who don't, a quick definition is, if you know the story of the golden goose, it produces golden eggs every month. So we're looking for properties like that, that the rent minus all the outgoing expenses still has a profit at the end of the month. And for big cities, like even in Singapore, in the current low interest rate environment, a lot of properties are still negatively cash flowing, meaning your rent minus your mortgage and all your other, your property tax, your maintenance, you're probably going to run a loss every single month. So that is not what I mean by a Golden Goose Property. Check out this other video over here where I describe what is a Golden Goose Property. And in fact, our first Golden Goose Property for the year 2021. But back to today's question, should we look at investing in insurance? And I think that's the crux of the topic, investing in insurance. To me, first of all, I'm not a financial advisor, but my personal take is insurance is a fantastic defensive strategy. And it's not so much an investing strategy. You got to know the difference between the two. And for me, I'm a big believer in insurance, where it helps me cover the risk of, say, medical or health, and that's what insurance is essentially, right? You pay a premium, and for these companies to take away the risk. For example, if we fall sick, we need to go to the hospital, or in the event of death or disability, and it covers the risk of that. That's absolutely important. If you don't have a hospitalization insurance, or even if you have some term policies to cover events that are unforeseen, or rather foreseen. I mean, everybody's going to die one day. These are things that are basic, and it's a defensive strategy. The challenge comes when people start to use defensive strategies with the intention to grow their wealth, or they take defensive strategies and they think, let's invest in insurance. And I think that's where it gets confusing, because some insurance products out there do have an investment element. But my own experience, and also looking at many other people who have come and told me that, hey, you know what, I have bought a lot of insurances over the years. Every month my premium is in thousands and thousands of dollars, and they're thinking, oh, if I want to sell it, there isn't a break-even point. I just have to keep paying every single month or every single year, all the way for the next 10 or 20 years until the policy matures or expires. And wow, that is quite scary, isn't it, for something to be set up where there's no break-even point. So just from an investing point of view, to me, in terms of liquidity, people think that property is less liquid. Well, to me, if you buy in a good location, you can sell your property in anywhere from 4 to 6 months at a good price, right? If you want to exit it quicker, if you sell it slightly below market value, you should be able to sell it much quicker. Whereas for insurance, the exit, you can exit, but you're going to exit at a big loss, right? Straight away off the cash value of the policy. So firstly, liquidity is not a good factor for insurance. Secondly, I think, and most importantly, is the strategy. Are you investing to create more passive income, for example, which I know some insurance products do create some element of that through dividends. But the big consideration is this: insurance insures you against a certain risk, right? It doesn't necessarily give you returns from an investment, even though some policies might be mixed. So it goes back to what is your strategy? If you're looking to create more passive income, which investment instrument is going to give you the most bang for your buck in terms of that? Yeah. And I think another big reason why I think properties work well is the idea of control. And you'll see this as I look at other videos as well. Let me know what other asset classes you would like me to do that comparison or that showdown with, right? Golden Goose Property versus, it could be stocks, it could be cryptocurrency, it could be bonds, it could be REITs, or even timeshare. One of my friends, investors, came to tell me, hey, I bought a timeshare. What should I do with it? And I'm going to have that in one of the video series coming up as well. So let me know in the comments below, what are other investments that you think you're thinking of, you're not sure whether you should buy an investment property that rents out and gives you good cash flow, or this other investment instrument. Type it out in the comments now. So coming back to insurance, I think a big thing about that is the control. There's very little, in fact, nothing you can do to increase the value of your investment over time. Whereas with regard to property, you could always, redecorate the property, and we all know this, right? You could put in a nice layer of paint. We could do some interior decoration, and that gives an uplift in value. It gives you an uplift in rent. For example, you could provide Wi-Fi. You could provide cleaning services for your tenants, and that's where there's so much creativity that can go in that will actually give you a higher yield, a higher value of your property. And that's one big reason why I love property investing, because firstly, it fits my strategy of passive income. I can control what the property does in terms of, I can force the appreciation of the value, and I can we'll talk about that in another video as well. Instead of just waiting for capital appreciation to happen, how could we already force the appreciation of an asset that we own? All right, so I hope this video has been helpful for you. If so, just smash the like button, subscribe to this channel if you haven't already, hit the notification bell as well. In the next video, we'll be doing another showdown, Golden Goose Properties versus cryptocurrency and Bitcoin. And I know that's a big thing in recent markets, and a lot of investors are jumping in. So till then, see you at the next video.